Is a 10% credit card interest cap a good idea? Well, at first glance, the average person is going to say, yes, that is great because current credit card rates around 23 to 24%, well, they're ridiculous. However, when you dig deeper into credit cards and how they work, people have to realize the risk for defaults and late payments, well, they're rather high. Banks that issue credit cards are in business to make a profit for their shareholders. If there's no profit to be earned, well, then there's no point in a business offering that service. The current default rate on credit cards is about 3%, which means banks have to write off the entire balance of whatever that person owed. The higher default rates are seen in zip codes with lower incomes and also for younger borrowers who simply got in over their head. If the 10% cap on credit cards does go through, it will hurt people with lower incomes and those that have lower credit scores because banks would no longer be able to be profitable on those accounts and they would simply stop offering credit to them. It would also affect many across the board, as you could see a reduction, if not elimination, of the points and cash rewards on credit cards, which would be a disappointing thing to happen for many. In my opinion, it is better to have the higher interest rate on credit cards like we have today, as it broadens the pool of people that can access this tool. Unfortunately, people need to use some self-discipline to not get over their head and make sure they can pay their payments and hopefully, I'm saying hopefully, not carry a balance on that credit card. If they can do that, they pay no interest and also can benefit from cash back and other reward programs. I'm Brent Wilsey with Wilsey Asset Management. If you like these videos, well, be sure to give it a like or comment and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.